Hello.
Good morning, everyone. So, welcome to the Startup Cafe. I'm Ricky Blair, and this is.
I'm Dev Sharma.
We're going to get into a bit of a conversation soon. We're going to spend a bit of time. I'm going to be interrogating Div for about 30 minutes. And we're going to do some Q&A. Just touching upon very briefly the kin. I think from my own personal perspective, this is a very special place to me because, as you may know, Oliver Evans, who co-founded the kin. He's British, as am I. We had a conversation maybe 3 or 4 years ago in Venice about his dream, his vision to actually bring this thing to life. So every time I come to this building and I see this thing happening, it like blows my mind that just something that was in his head 4 years ago is as I see it today. And it was always, the plan was to always bring people together, just creating, doing unique things, trying to make an impact in the world. And I just said it to Ollie, like I've just been talking to a few of you this morning, and my comment was, this is why I love LA, because it just seems like everyone is doing something interesting, unique, fun, different, and that's probably one of the reasons why I love being here. So welcome to the kin, and I can't speak highly enough about it from a personal perspective, but you're also going to speak to someone who's here more often.
So it's my 1-year anniversary at kin. I joined kin like 1 year ago. I just walked in, it was not this well set up. But, I just really vibe with the people. And I was like, this is the place. And it's 1 year now. And, I grew my team here. I stuck here, made a lot of progress. So just really like Ken. I think it's my, Santa Monica, Venice, and Ken is one of my very special places in the world, I would say.
Right. Without further ado, it's time for your interrogation.
Let's do it.
So I think we'll start with, would you be able to give us a bit of a background overview as to who you are, where you're from, what you do?
Perfect. So my name is Dev Sharma. I'm the co-founder and CTO of CoverTree. I was born and raised in New Delhi, India, and I moved to the US when I was 17. I went to University of Michigan, studied, go blue, let's go. Studied computer science there. Michigan was a great time, had an amazing 4 years. At Michigan, you meet the smartest people, the greatest athletes, and also really fun people. So I had a great time at Michigan. Fun story, I actually met my co-founder at Michigan. We were roommates in college. So, went to Michigan, did my 4 years, learned a lot, and then, graduated and COVID happened. So COVID happened, saw an opportunity in insurance, manufactured homes, started CoverTree. Now doing it for the last 4 years, we are a team of 50 people. We're active in 15 states. We have raised $23 million in venture capital, and I'm just having the time of my life right now.
That's awesome. And if you can, it's such a crazy story, raise the fortune at such a young age, and it's incredible. High level, what does your company do?
Cool. So at CoverTree, we insure manufactured homes or mobile homes. So let me give you a bit of background about manufactured mobile homes. Manufactured mobile homes is a big market in the United States. 22 million Americans live in manufactured homes, 7 million manufactured homes in the US. 1 in 10 every new home is a manufactured home. So around 110,000 new homes every year are shipped, are manufactured homes. Where do you see these homes? These homes are usually in rural areas, so not in cities. And who lives in these homes? It's like middle America, right? So a lot of these homes are located in states like California is a big state, Florida, Michigan, middle of the US, Southwest, etc. If you look at this industry, right? It's really important for us, affordable housing right now, because the interest rates are super high. It's becoming very expensive for people to buy homes, and this market is growing. If you look at the insurance space in this market, there are two legacy companies that dominate this market, foremost in American Modern. They own 25% of the market share, which is pretty unusual because let's say if you're an auto insurance company and you own 3 or 4% of the market share, you're already a Fortune 100 company. So in this space, it's a little different because it's more, antiquated, more niche market. Where we come in as CoverTree, we bring digital distribution. So we are the first company where you can buy this insurance completely online. We build a completely new insurance product that actually uses all the new data sources and risk criteria to adequately price the customers. And then we also innovated on the distribution angle. So we distribute through 3 different channels. We distribute through direct to consumer, so you can go online and buy CoverTree insurance. We have around 4,000 agents across the US who also use a portal that we built to sell CoverTree insurance. And then finally, we work with community operators. A lot of these manufactured homes are in communities. I don't know if you guys have seen, there'll be like 100 homes in a community, and these communities are owned by like big private equity groups. So we then work with, these private equity groups to help the residents get insured. Really, before CoverTree, there were very limited insurance options for residents living in manufactured homes. They had to go through an agent, answer 60 questions, had to pay a lot of money, and a lot of times these people were not able to find insurance because big insurance companies don't really insure that market. They're going for the bigger auto insurance, home insurance, like bigger market. This is a niche market, so it was underserved, and there was data asymmetry. People didn't know about it.
I mean, what you're doing at the age you're at, the amount of money you've raised, over $20 million, you're having great success. There's got to be some obsessiveness in there. People have mentioned obsessiveness in what you do as an entrepreneur this morning to make that kind of thing happen. My question to you is, was there an obsession around becoming a successful entrepreneur, or did you have a passion and obsessiveness around the insurance space?
So definitely growing up, and like even before I moved to the US, I wanted to start a tech company. Like I wanted to come here and like build something in technology. Why was that? Because when I was in school, I used to do quizzing, and my specialty was learning about tech companies, and I used to just get really fascinated about how you could like start companies in garages and like it could become like the biggest company in the world, right? So it was just like very inspiring to me. And I think the obsessiveness was definitely, I wanted to become an entrepreneur, but it was more nuanced. It was like, I realized that, you cannot just do the biggest thing in your first try, In your first try, and sometimes it works out when you go for more abstract stuff, the valuations are higher, the multiples are better. But for my first thing, I wanted something more defined. And the key insight was I wanted to build technology in traditional industries in America. A lot of my peers, when I was starting my company, they were focused on crypto, NFTs, the great technologies, but more abstract, right? I wanted to, build, me and my co-founder both, we just wanted to build technology for middle America. We were in Michigan, being in Michigan just made us exposed to like a lot of different industries like construction. Manufactured homes was actually big in Michigan. Real America, how people who run traditional businesses make money. And we were like, hey, if we were able to enter these industries and build tech, streamline things, streamline workflows, not do some crazy innovation, but just make everything more efficient, we can get our first win, right? And then we can go to space after that. So,
well, that answers my question, what the dream is long term, space. But we'll come on to that.
that was just an example.
I think the biggest impact my business mentor had on me from a young age was going different, finding your own unique lane, finding your niche. And every business I've been involved with, that was always like the North Star, the holy grail, to find a way of doing something differently. And it seems like you have stumbled across something quite unique and niche here. So many entrepreneurs I meet are looking to find their thing or that business or that idea. I always get asked the question, how do you find it? How do you stumble across it? How did you do that?
Yeah, like I get asked this question a lot, and my answer to this is there's no playbook. Like there's just no formula that like it works. Like also you cannot just sit and be like, today I'm going to find problems and I'm going to use all my knowledge and I'm going to just sit and write down problems, and then I'm going to stumble upon a great idea and it's going to work out. It really doesn't work out like that, What was interesting in like my specific journey, I would say, is both me and my co-founder, we were always doing experiments. We were always like shipping. Like we had a great feedback loop. Like we were both self-responsible, equally to like take it forward. And we were just kept on doing experiments, right? We did not stumble upon manufactured homes the first time. Okay, the way this company started really was COVID happened. And, I had a job, but it got rescinded. So I was like, to hell with it. I'm going to start my own company. And then there was a big auto insurance reform in Michigan, due to which you could save up to 50% on your auto insurance. The state made some limits non-mandatory. And we were like, hey, why don't we just do some marketing, spin up a website, and educate people, run some ads, and do something, get going, right? And like we did that experiment. We ran marketing. People used to come to this website, fill out the form. We used to connect them to an agent within 15 minutes. And in the first 2 months, I think we did 100K in premium. And then that was like the first step. Okay, we can sell insurance, okay? But this is just like still very manual. What's the next thing? The next thing was let's make it more digital, right? So we started going to all these big insurance companies, auto insurance companies, that, hey, we want to sell auto insurance online. Can you give us APIs? Can we build integration directly? A lot of them were like, no, you're too small. A lot of them did not have APIs, so you could not really build integrations. And there was just a lot of politics involved, right? The key insight, again, there was, how can we get customers without spending money on marketing? Because a lot of businesses, when we were started around that time, were all based on digital marketing. The cost for acquisition, for acquiring customers online was low because everyone was home, right? So, but that changed in 2022 when the market downturn happened. Like the cost, all their financial models were based on that cost for acquisition, but it drastically went up. So our key insight at that point was like, we don't want to build a business based on marketing. It needs to be through non-traditional sources. So like for auto insurance, we were looking at car dealerships. You cannot take your car out of the dealership if you don't submit proof of insurance. How can we get embedded there? Apartment buildings. You cannot rent an apartment building if you don't show proof of renter's insurance. How can we attack the customer at that point of contact? Manufactured homes was, again, a traditional one. It was one of the verticals, right? Which was traditional, where we could, same concept as apartment buildings, but it kept on evolving. We kept on refining the thing, and then eventually just things start making sense that, hey, manufactured homes, there are these two insurance companies, they're very antiquated. You cannot buy it online. People think manufactured homes are trailer parks. They don't think it's good risk, but it's actually quite the opposite. The average credit score of a customer is 730, So there's this information asymmetry, and you can really just build a really good business, good distribution, good customer service, and you can do well for everyone. So
when I think that some of the biggest challenges or pain points I see entrepreneurs have is starting. I think people find that scary. I think people procrastinate and wait for everything to be perfect. I've definitely been victim of that one myself. I see a smile or an acknowledgement there. And also, like, we're always trying to figure it all out. We always want to know the route, how it's going to go, what happens next. And it sounds like in your case, you just went for it. You said it yourself, like it was like a series of experiments, and you kind of went against the grain and did all the things an entrepreneur, I guess, should do. Is that something you learned? Did that just come natural to you? Did you just have a sort of just go for it kind of mentality?
No, 100%. Like I felt like a lot of people feel like starting is really hard, and like you get imposter syndrome, right? Like where you start comparing yourself to other companies, and you feel like, oh, I'm not there. Like I had to really train my mind. Like I always wanted, like I also managed a tech, like I'm the CTO. So I always wanted to build a great tech solutions, right? But like you need to understand, like you can build the best tech solution. It does not matter if no one buys it. Like it really does not matter. You can have the best product. You can have everything great. If no one buys it, okay, you're not in business. So I just had to really train myself. Okay, let's get to market quickly. Let's not build the best technology. Let's do some experiments. Let's do some testing, right? We can launch. We can get some revenue, and we can show some validation, right? That was always the mentality of continuous iteration. At the beginning when I started, it was like, I still have those documents where I sketched out the entire thing, and the V1 had like crazy features that we still don't have 4 years later, So you just had to train yourself.
Has it been easier than you expected? Has it been harder than you expected?
I think the interesting thing I would say is that when we initially started, it was really hard, but the thought was that once we scale up, once we have a bunch of people, once we have structure, more advanced technology, it will become easier. But guess what? It keeps getting harder. It keeps getting harder. But it's different kind of hard, right? The problems now are very different from the problems back then, and I think the big thing is you just need to keep evolving. Like, you just need to bend down and be like, all right, let's evolve. Let's figure out what's going on. And yeah, it keeps getting harder though. To answer your question.
I actually mentioned this to Ollie earlier on. One of the things I've noticed about you, having had a couple of conversations with you, is your mentality and your mindset. And I remember one of our first conversations, and I don't mean to make this like a sob story, I was telling you about I came to LA to build my own business and how scary it was. And I said, I miss my family immensely. I'm a long way from home, which as you are. And you said to me, I just can't think about it, Ricky. Like I said, is it tough for you? He said, I don't think about it. If I do, I'll drive myself crazy. And it's like, you've got a choice. You either get on with it, I get to go home and see my family, etc. But it's like your mentality and your mindset, it's so tough and resilient. And I guess my question to you is, mindset-wise or mentality-wise, what advice would you give an entrepreneur at that early stage? Because I know it's bloody hard and scary at times.
Yeah, at early stage.
At early stage, or just, I think it's, you asked me about, I asked you about the scary parts. Sometimes ignorance is bliss. The first company I set up, I always say, if I knew what was going to be involved, I'm not sure I ever would have started it. But things materialized, and I had no choice but to make it happen. It's scary and tough and challenging along the way, but you've got to keep your head together, and you've got to keep going even through the tough moments. I guess if there's anything you could speak to on that point.
Yeah, I think the biggest thing is to just keep going. You'll see a lot of people just quit. Like, a lot of competition just gets eliminated because people just quit. So a big thing is keep going, but also I think like it's very natural to have anxiety, and like when you're in the mix, whether you're doing well or not, I would try to make my co-founder is my best friend, so that really helps. That is really important. Like we have become even closer since starting the company, so that really helps. Like we both are like we have a great personal and a professional relationship, but also I would recommend people to have self-feedback loops. How you can track your own progress, how you can set structure and track your own progress every week or every 2 weeks. Like if you're feeling anxious that you're not making enough progress, ask why. Like why, how did I come to this conclusion? Like what have I done, what were the results, right? So you just need to like a lot of the game is mental. You just need to be very resilient. When I started the company, I obviously did not know anything I was getting into, right? I had no idea. Just graduated from college, right? So it was good though. I think that helped me though. I was able to mold myself.
Maybe
right?
ignorance really is bliss after all.
What?
Just ignorance, not knowing what you're getting yourself into, and it's maybe helps in a way. You raised, was it $23 million?
Yeah, that was like that was a year and a half ago. We just did a little bit more capital right now.
And can you talk us through that sort of process? Were you looking to raise? I assume the answer is yes. How did that go? The challenges involved, etc.
Yeah, so our last financing round was in November of 2023. That was our Series A. We raised $13 million in Series A, and it was really hard. It was a very hard time. So background, I would say in 2022, May of 2022, April of 2022, we had just closed our seed round. It was a $10 million seed round. It was right at the end of the hype cycle. We were just at the end, just scooted in at the end of the hype cycle. And we didn't have that, we were still very small company compared to what it is right now. It didn't have that many metrics, and we were able to raise a pretty good Series A at a very good valuation, right? And then, as I mentioned, the market changed, right? Started self-correcting. All these later stage companies which had raised hundreds of millions of dollars based on financial models which assumed customer acquisition cost at a certain variable were now doing massive down rounds, and a lot of companies were going out of business. So the market changed, right? And then people were saving their capital. Instead of investing people were just waiting. People were we'll wait to see what happens. And it was just hard. And the big thing that changed after that was focus on profitability. There has to be a part to profitability. It would not work the way it used to work, where you just spend a bunch of money, acquire a bunch of customers, get a crazy valuation. And insurance is also different, right? It's not enterprise software. When you acquire customers, it's not like you have the money, you have to pay the claims on it later on. So it's not a simple enterprise software sale, right? So it was different, and you had to do all this while growing aggressively, right? You had to At that time, the Series A, like to do a Series A, you had to had around $1.5 million in revenue. So and it had to be growing like 3 to 4x, and you had to have good unit economics, which basically means how much money are you making on the policy from year one to year 5, year 6, how much, whatever your customer retention period is. So yeah, it was just a challenging time, and we had to really grow up. We had to get our finances in order, create like a 3-year pro forma, figure out our unit economics, get our data reporting in order, make sure our distribution channels are close deals, make sure after closing deals, execute on those deals. So there's just a lot of things that were happening. And then, so like I manage like operations and technology, and my co-founder partnerships and venture capital, and he was on the other side, dealing with this. And, we were able to luckily find great partners, Portage, that we actually met 2 years ago at a conference. We just kept in touch with them over the 2 years. We kept on giving them feedback and and on how we are performing. And, they were luckily down to, proceed. The big thing is all our existing investors, ever since we started the company, have always participated in funding rounds. So our existing investors also helped, and we were able to close that round. It took 6 months though, after signing, almost 6 months after signing the term sheet, because there was so much due diligence on technology, financials, audited, like everything was just like, it was a different time, I would say. Yeah. But it was cool. I think it was a great learn. It was great for us. We grew up quicker than a lot of companies at Series A stage do. We had to hire a CFO and stuff, so it was cool.
I'm trying to put myself in your shoes. Young age, raise that kind of money. I'm wondering how the impact that has. Is it exciting? Is it nerve-wracking? Is it validating? Does it become a little bit more serious? How did it feel at the time?
How did it feel at the time after raising the round? It really just felt like relief. Nothing else. Nothing else. It's like, okay, cool. Now we can keep doing what we are doing. It was obviously it was just obviously a celebration, but the biggest, I would say, feeling was relief. You would see a lot of insurtechs which were started around that time. They've all died. A lot of them have died. There are very few insurtechs that are surviving right now, and yeah, it was honestly relief, and I was just very happy that I could keep doing.
What is the dream of the company? What's the big picture?
Yeah, that's a great question. So, we are in an industry, manufactured homes, right? Our customers are customers who live in middle America, who live in rural areas, right? Our customers might spend $120,000 on a home as their nest egg. Average age is like 61 for our customers, 60 as their nest egg. But, they have disposable income that they spend on things like boats, RVs, ATVs. It's like real like middle America. When you go there, you'll see a lot of these toys. Our vision is to become the tech-driven specialty insurance in middle America. So we start with insuring people's homes, get to manufactured homes. We capture this unique segment that is in middle America, like, great credit scores, great insurance risk, great loss ratios, which basically means, like, in our industry, there's a decent amount of underwriting profit. Like, we have good risk, right? So we get this captive base, and then we cross-sell them into other products, which are RVs, ATVs, motorcycles, become like a brand in middle America for specialty insurance, right? There's not like this Geico Progressive. It caters to like a lot of different people who want to be like more outdoorsy, like look at Yeti as a brand, great brand, right? Something more like that in terms of insurance.
One last question on the entrepreneurship side of things before we move on. I just want to talk about a bit about insurance, which I'll move on to. A lot of entrepreneurs I talk to, they're always feeling like there's this imposter syndrome, which you touched upon earlier, or feeling like they're not ready, or they don't know how to do X or Y. And I have this sort of feeling that everyone has to do something for a first time. You're always doing things you've never done before. And I'm wondering, has there been quite a bit of that for you in your journey? Like, have there been things or aspects of the business which are completely foreign to you, which you just had to sort of dive into, and all of a sudden you learn a new skill set or quality, etc.?
Totally. Yeah, recent examples. So last year we, like early 2024, we launched a new product called Maple, which essentially tracks insurance for all residents who live in a community. You're supposed to submit proof of insurance for the community, but there's no system to track it. Our system just tracks it automatically, um, and along with like helping consumers get insurance. So it was a completely new product, and the person responsible for that channel previously, they were not no longer with us, and there were talks at the company that maybe this product, we've invested a lot of money last year, maybe it's not worth pursuing, maybe we shut it down. And I was like, let me try once. Let me try once. Let me take control. Just give me one person, and let me just try for the next 2 quarters. We'll not have any expenses, right, or anything extra, just the same, right? And I just had full control, but that meant like dealing with lawyers. So before that, I was more into like operations and technology, but with this new product, right, I had to get into everything, like more so like legal, working with the lawyers to make sure the leases are good, working with new partners, doing business development, going to conferences, like getting suited up and like trying to sell software. I had to do so much stuff, and it was a great learning experience. I mean, it was literally starting a company within a company again, and now knock on wood, like it's almost a year, and now we are like Maple is gonna hit like itself, it's gonna hit $1 million in premium revenue at the end of this year. So that itself, like was a crazy
Awesome.
experience because I had to learn so much stuff which I did not do because I was in a different shell.
Did I just hear you say suited up?
Yeah.
I don't think I could ever imagine you in a suit.
I can rock it.
Insurance. We've had interesting times over the last few weeks in LA with all the fires, obviously, and you hear some sort of terrible stories, especially around insurance, people having uninsured homes, etc. Just wondered if you could talk a little bit about your oversight, your views on that.
Yeah, it's a very sensitive topic. It's like a very sad time. Palisades it was my dream neighborhood. I really like Palisades. It was so beautiful, and it was just really sad to see everything burning like crazy. Seemed like from a movie, but due to this recent events, a lot of people have questions about insurance. There's a bunch of media reports. How does it work? It becomes even more important now that these wildfires and all these weather events are becoming more frequent. I'm just going to focus on California. So what's this problem between insurance companies in California? Like, why is it so hard to get insurance in California, right? And why do insurance companies don't have insurance in California? There are a couple of reasons. So like every time you need to launch, let's say you're doing it the happy path, right? Every time you need to launch in a state, you need to get approved by the Department of Insurance of that state. You need to submit all your rates, your underwriting criteria, everything. And they want to make sure that you're not overcharging the customers, you're not discriminating based on race. So like you need to file everything with them and they approve it. And then only you can do business, right? Even if you want to do rate increases, you need to have a proper justification. You have to file. We do it for every state we are in. We do the same thing. You have to file it and they review it and they approve it or reject it, right? Now, the California Department of Insurance is known to be very compliance heavy and not open to rate changes. So it's like in California over the last 10, 15 years, home insurance companies have lost billions of dollars in money. Like, because they are not able to charge the riskier customers more money and less riskier customers less money because the California Department of Insurance just does not approve rate changes. They do not, there's a lot of consumer protection guidelines here. So they really don't look at weather and see like if it's allowed to do the rate change or not. The second thing, which is super rare, doesn't really make sense in California, is that in predictive models, right? So in every other state in California, besides California, you can use the historical data, but you can also use what you predict the weather would be in the future and use it for pricing. In California, you cannot do that. In California, you can only use historical data to price the customer, but you can never use future-focused data on weather to price the customer. That is, if you Google this, like after this talk, you will see it's a big issue, due to which like insurance companies are not able to price customers in California. The third thing is usually when insurance companies, all states are doing this stuff. Like, this is very California specific. So in California, when you launch, you need to sort of offer coverage everywhere. It's like usually in other states when insurance companies launch, they choose their areas. Okay, we'll do this wildfire area, we'll do this tornado area, we'll do this, But in California, if you launch, you have to pretty much provide coverage everywhere, and it's really hard to decline customers who are in high risk wildfire area. Again, stops insurance companies from making money or like being profitable, right? And the I would say the final thing is just a lot of like regulation, and just like the Department of Insurance is just not that friendly, right? So a lot of insurance companies you have seen have withdrawn from California over the last few years, and even with this new Palisades fire, like actually the big fourth thing, which is really important. So if once insurance companies withdraw from California, they're the customers who can sign up for the state-run insurance company, which is the California Fair Plan. California Fair Plan is bankrupt, by the way. It's $20 billion in losses. They just asked for $1 billion more from the government. But who contributes to this California Fair Plan? It's all the private insurance companies. And they say that, hey, the reason people sign up for this California Fair Plan is because we have to withdraw coverage because you don't let us charge enough money. So it's like a cycle, right? So yeah, it's just really hard for insurance companies to do business in California, and the Department of Insurance is trying to change, but I just think that I just don't know why it's so compliance heavy. So we're gonna launch in California by the end of this year, and we're doing a hack. Essentially, we're not going to the Department of Insurance. We're launching an excess and surplus lines program, which allows us to have less oversight of the Department of Insurance, and we can offer coverage to more people and adequately price people. And this state needs more coverage. The state needs more insurance. Weather is only getting worse, right? So yeah.
I think I speak for the room when I say what you're doing is incredible. It's inspiring, and I just wish you all the best for the future with the business. And thank you for taking the time to speak today.
Cool. Thank you so much. This was fun.